Hey gang, welcome to Dr. Frank's Finance World. I am Dr. Frank, the bank, because I try to teach you something about finance and hopefully make you money on that in the future. This is the last of our series on technical analysis. We're going to be discussing Fibonacci and support and resistance levels. Please be sure to subscribe and click notifications if you want to get future videos. There should be plenty of them on the next topic of fundamental analysis. Then look in the notes for links and websites. We're also going to begin putting some at the end of the presentations here of each of these videos. And then check out our books in the bookstores. We look pretty hard for good books for you and see if that interests you at all. So Fibonacci is actually borrowed, if you will, first used in the natural sciences all the way back to 1200 AD, believe it or not, an Italian mathematician. You could actually go further and look all the way back to 200 BC when you look back to India. So it's something that's been around a long time. And it's actually a sequence of numbers, but it seems to be used in many ways, kind of like when you look at a normal distribution being used across many different science disciplines. The same is true for Fibonacci as well, but it's used in everything from computer programming to the analysis of trees and flowers, leaves and fruit, and so forth. And actually was used in studies to calculate the growth rate of rabbit populations. So anyway, it's also strongly related to something called the golden rule, Bennett's formula, and things in nature as diverse as the conical shape of shells and things like that. And beauty itself, actually, measurements of people's faces and what the world seemed to say were beautiful people, were related to the golden rule and Fibonacci sequence. So the question is why, or should we care about Fibonacci as it relates to the investment world? The question really in many of these is, are they followed by others, and are they going to actually be used in sequence or in conjunction? Because if enough people believe it, it will actually tend to have an impact on, at least very, very short term, on investments and so forth. You can overlay it onto graphs. That's the kind of neat thing. My favorite graphing program is probably stock charts. And inside of that, we'll have a annotate that you can hit. I'll show you what that looks like, and create these sequences. So the sequence begins with 0 and then 1. And from that point in time, you add the previous one to it. So 0 and 1 is 1. 1 and 1 is 2. 1 and 2 is 2. 2 and 1 is 3. 3 and 2 is 5, and so forth. And you can see it kind of stretches out here. It sort of may represent points in time, both returns upward and returns downward, that you get a pause because some people are looking at that and wondering if that's sort of the natural sequence where it will begin to reverse its pattern. So they call it Fibonacci retracement. Does anyone follow it? And if it is, it actually becomes a self-fulfilling prophecy. That's why, for instance, on Bollinger Bands, I'm going to go back and check 34 days to see if maybe that has some significance there as well. So anyway, once again, there's the sequence if you want to know. And what it looks like when you chart it, at least inside of stock charts, is something like this. Won't tell you the stock out there, but it's Bollinger Bands and so forth. You can see up and down. But down here, way at the bottom on the annotate button, you can click on that and actually have it add a Fibonacci sequence. This one is 38% up from the bottom down here. You click on the bottom where you want to start, or the top where you want it to start, and look at it heading downward. But there is a 38%, and it looks as though just prior to that, perhaps it sort of stagnated for a while, and then you get up to the 50%, and maybe it paused there. It may have even paused it for a short period of time on the 68% before it vaulted up to the next level of the Fibonacci sequence. And so, I mean, does it follow that? My guess is it does. It seemed to do okay here, but on this sequence, it did stop at 38%, and it sort of paused and came back down and bounced off of 50%, and then the 60% level up here and so forth. But anyway, that's what it looks like when you chart it. And the general idea is are we seeing a pause at least, or maybe a redirection when it gets to that point in time? So there's an interesting book on it, Fibonacci Trading, How to Master the Time and Price Advantage, out there by Carolyn Borodin, if you want to check that out. And we could actually look at research in the Atlanta Press out here. Let me go and see. I think I have that over here. An adaptive constructing trading strategy. So is it, yeah, in the Atlantis Press, here it is. It's proceedings from a conference out there, education sciences and so forth. And what they did, the goal of the paper is to investigate the performance of Fibonacci sequence investment strategies in the Shanghai stock market. So you'll see many times they use indexes, as is always seems to be the case when they try to prove or disprove that. But at any rate, the numbers, they tell you what they are referred to out there. We construct buy and hold portfolios based on holding periods and market conditions. Now, I think a lot of this stuff, whether it's Bollinger Bands or relative strength or Fibonacci, is a short-term phenomenon, so I actually wouldn't expect it to necessarily do as a buy and hold long-term, but it suggests Fibonacci strategy still has excess returns in the short run, but no strong evidence over the long run. So they suggest looking at it possibly as a trading strategy over the short run. So strategy tips, something to look at for possible pauses, but I take a very quick glance at it and then most of the time just move on. Don't forget to send me emails on this. And if you have any suggestions, Dr. Frank out there, ask Dr. Frank. And the next topic, of course, we're moving directly onto is support and resistance. So once again, be sure to subscribe and so forth out there. Support and resistance many times is related to supply and demand. And the price, I believe that it is somewhat backed up in the fact that you have many research houses out there that say, hey, this stock is fairly priced at a 20 PE, but not at a 25 or 30 PE. And so I think some of the bumping up that you have for the resistance to going higher, or even the support coming down going lower, is due to the fact it's bumping up against numerical numbers related to multiples, and we'll see what that looks like in fundamental analysis. But basically, it's identify price points where the probabilities favor a pause. Support when they expect the trend downward to pause or reverse back up. Resistance where it's coming up and then it cannot get above that price and so forth. So what that looks like in the real world is something like this. Why might it pause? Others believe that the support level thinks it's fairly priced down here at this multiple of earnings or whatever out there. You might see that out there. You know, perhaps it hit a price to earnings or price to book that was historical or recent that people thought was fairly valued. And you may see it look like something like this, but it won't go above a certain price. This is a pretty wide price range here, 460 to 580. And maybe the people just don't think it's worth more than that. And they do a lot of relative to the industry work on that as well. And I think that's part of why you do see at least a little bit of this out there. When I'm looking at downward trends and the possibility of finding support, I exactly look at these support or these resistance levels. So it is interesting that when it goes past a level here that was, in other words, the support level came down and it hit that price again, but once it breaks through the support level, there is some support, I believe, or some truth to the fact that that becomes a resistance level going up. Many times I think it's actually an earnings announcement or something that causes this to drop below. But it is something that I believe is somewhat true, that when it drops below a support level, that becomes resistance heading back the other direction. And resistance, of course, becoming support. It couldn't get above. Maybe the earnings announcement, wow, it's doing better. And that became the support level going forward. I think that's pretty common out there, to be honest. What does research say? Well, it was a book. There's a really short book, but it's a pretty good one called The Ultimate Guide to Support and Resistance for Beginners and Pros by Samson Olamigoki out there. But at any rate, you can find that in the links as well to the Amazon bookstore out there, book site. There's several research papers on it. SSR and the Social Sciences Research Network, Science Directors, where you tend to get smaller publications, research papers, and so forth. So let's see what they have to say about support and resistance. So the SSRN article says, point at which the exchange rate trend may be interrupted and reversed or supported. Nevertheless, the ability to predict intraday trend interruptions has never been rigorously evaluated. So they're going to do it. It undertakes the analysis. The offer offers strong evidence that the levels help to predict intraday trend interruptions over the short term. However, the level's predictive power is found to vary across exchange rates and firms examined. And this kind of gets into what I call well-behaved firms. One of the things I'll go over later on in one of the worlds out there, probably the investment world, is research I've done for people where I look at things like this and say, is this a well-behaved firm relative to technical analysis and things like that you might look at? So the next paper talks about stock index trading decisions and support, provides an automated adaptive model. It's more about models and how they might use some of this stuff in there. It predicts the stock price direction rather than the forecasted level. They looked at particle swarm optimization, and they tried to deal with market volatility. That's one related article out there. Another one talks about intraday technical trading in the foreign exchange market. The Forex market of currencies out there is a very, very large market and has a lot of leverage. So you see why people play in that space. But the out of sample performance, what that means is they use a period of time to say, here's what works from a modeling standpoint. And then from that time forward, they save some of the data. They apply those rules to future samples, if you will, to see if it works. Using two methodologies, genetic program and optimized linear forecasting. When realistic transaction costs and trading hours are taken into account, we find no evidence of excess returns to the trading rules derived with either methodology. Thus, our results are consistent with market efficiency. So try to throw those in there as well in case you want to learn a little more or dig a little deeper. So finally, the strategy tip on this one, something to look at for possible pauses. But once again, I do look when I think it's going to fall to a support level, when I feel like the market is trading in a range, I will look for the support and resistance levels to give me some help perhaps, and a chance to pause or consider whether I would invest because I think it's getting too cheap or too expensive. Anyway, don't forget to send your emails out there so I can put you in on Ask Dr. Frank. That's coming very soon. And then I'm excited as this closes up technical analysis, because the next world that I'm going to create is on fundamental analysis. I got many things to go over there, probably in the 20 to 30 video range. But when it's all said and done, you'll get a bird's eye view of what my 30 years experience, 40 years experience will teach you about what I look for from a accounting standpoint and so forth to be interested in a stock or not. So anyway, appreciate you. Have a great day, and we'll catch you on the downside. See you later. Bye-bye.